Hey everyone, welcome to acceleratoorg.com live with Jeff Bruno. Hey guys, so we are live. It's 6:45-ish, a little bit after on the East Coast. Welcome everybody who's making the live. Hopefully just a little later for some of those lazy West Coasters. Did I say that? Oh, I meant West Coast people. We're going to jump in here on questions about finance, operations, strategy on this hump day, as Patricia Watson calls Wednesday, hump day. And hopefully we'll get through this this week with no major hiccups for everybody, and have a good end of your week when you flex it out on Friday. Great. Let's start. Welcome to 2022. So we'll jump right into the questions. First submitter is David I think it's Mange or Mange. David Mange. His question is, how do I instill good work ethics in my team? I have a team member that leaves at 5 and always does the bare minimum. Any suggestions? I hired my first team member about 9 months ago. She mainly helps with clerical activities, setting appointments, and with follow-up calls. She's smart. I know she has potential, but she does the bare minimum and always leaves at 5 on the dot. I don't know why that bothers me. So, David, your question is applicable because even though it's not finance and operations, it could ultimately be something that is what I would call an activity that you need to track within your business model. So, let me be a little more clear. So, I've had, we work with a lot of different clients, and there are only a few people in this world and in this country that are really extreme go-getters. You happen to be in a group here with accelerators.org, mostly owners obviously, that are very strong go-getters. And in the small business and medium-sized business space, I would say, I don't remember the statistics, but it's really high. I think it's like 70 or 80% of people just want to make a good salary, plow ahead. Yeah, they want to move up, but they're not overly ambitious, but they'll work hard, but so they want, when they're done, they're done. They come in, they do the job, and they leave. Then you got 10, 15% more people who they'll really crank. They'll go extra hours and they'll work and try to get ahead. And then you have 5% of people or less who actually can do something and work completely without structure, like entrepreneurs. So, you can't expect people to want to be that 15%, and certainly not that top 5% in most companies. You got to expect that they're the 75% or 80. So you got to keep that in your mindset. Now, what I mean by metrics is, and I see this with companies, sometimes, and don't take this the wrong way, but sometimes the owner's culture is not set up the right way. And people are maybe work too hard during the day and they're just exhausted and they're like, I'm done, I'm out of here. Or they don't have a passion for the work, or frankly, they're not empowered enough. We've seen it a lot where people don't get empowered enough by the owners of the business, and in doing that they struggle, and they just want to get out. And it's not that they'll work, they'll do the job, they just don't have any extra incentive to do more. So all of that keeps in mind, but you should look at culture, make sure culture is set up right in your organization for what you're expecting from the people. And here's something that I thought could resonate. I know this is not financial operations again, but I want to make this one statement for everybody on this live. So it's something really important to live with in culture in a small business. Okay? As an owner, always remember this. Control is about restricting power, and empowerment is about giving power. Think about that for a second. That'll resonate with a lot of people. If you want someone in your organization to step up, You have to give them the power, and they might start to show you some more of those tendencies. That's all I got. Next question. Eric Blandino asks, what are ways to have our team members reprimanded when they are not doing what is expected of them without them feeling like they are threatened with their position? We are in the business of giving people their homes back from the invasion of rats. We have daily huddles, and I bring up information and concerns that will help our techs and give written copies as well. I have let them know that what is expected of them, and I have done write-ups too. The problem is I find myself going in circles at times with the same issues being brought up. Our standard is 3 write-ups, and your future is free. Your future is free. I'm not sure what that means. But so, I mean, Eric, this is not. This seems like this is the no finance and operations yet. This is almost an HR or human resources thing. But I mean, monetarily, I don't think you can do anything with reprimanding people, because then forget it, you lose them. They're off the train. You can't slap them with like docking pay or something. So that's out of the equation. And especially these days. So I think again, this is more of an HR thing, but maybe the answer is be transparent. So maybe be transparent and have like a goal sheet up, a respect, a way that work should be done, and so on and so forth. And if you have to, just openly show people, well, look, Joe over here, he's hit all these things and cranked, and Sally, you're kind of behind on this stuff. Maybe Joe can help you improve what you need. Maybe you need some help from Joe, or maybe I can help you and offer to help to improve their situation, and just show the difference. And if that doesn't work, you're in trouble. Fire them. Look for some other people. You're just not interested in performing. So that is just unfortunately what it might be. So next question. Jenny Dawson. Should I switch from an LLC S Corporation to a Sole Proprietor? Business description and background. My business was really set up as an S Corporation in 2017, suggested by my CPA. At that time, I was running the business as a part-time hobby while working a full-time corporate job. I'm now looking for ways to cut back on spending my first year as a full entrepreneur. I spoke with my CPA to weigh the pros and cons of staying as an LLC versus switching to sole proprietorship. He explained that while it was a good idea at the outset, given the thought that ZSB would really take off and make a substantial amount of money, ZSB really does not make enough money to justify the expense of the S Corp at this time. So his recommendation, after seeing the past few years of performance, is to shut down the S Corporation and run my business as a sole proprietor. He suggests filing a certificate of dissolution with California, and I'll need to file a return with the IRS, which I can do when my CPA files my returns. I'm asking for a second opinion and insight from AO members so I can make an educated decision on the best way to proceed. Thanks. So, Jenny, I'm not a CPA. We're a strategic group. Jeff, you're out for CFO. We do strategy consulting and operational and financial planning analysis and valuation constructs and thought process. We are not a CPA. So I can't really give you advice on this. Just from my experience, I would say that an S Corp, to his point, is really when you have employees. That's the advantage of an S Corp, as far as I know, because you get some advantages for deductions there, and you can take salary out of it for you and save a little bit on some of those taxes around that, self-employment taxes, things like that. But if you don't have employees, it probably doesn't make as much sense, and there's probably more filing costs and things like that. But again, I don't know what your intention is. It's more of a tax question. So I would ask another CPA. Jessica Hodge. Next question. Should I keep my business partner or work independently? So as a nutrition coach, I originally opened an LLC. I had someone approach me wanting to invest in my company and in return own half of it. She was going to pay for marketing, web design, online ads, etc. After opening, signing a shareholders agreement, getting a bank account, she became unresponsive. I couldn't get time with her. The website was mediocre. She didn't commit any time to me or invest her finances any further. She said she was too busy with her other business. I offered to dissolve the corporation, and I want to just move forward on my own with my LLC. She is very successful with her other business as a multi-million-dollar company, so I thought it would really benefit me to have that resource. Her response to my suggestion to dissolve is she asked to be silent partner, adjust a percentage of shares, and she could still fund certain aspects until she has time to focus on the rest of it. I don't know what to do. So, Jessica, this is a very, very common thing. Partnerships, especially early on in business, is so difficult. So if I could give you like a little quick story. So I didn't start my business with a partner. Nobody approached me to be a partner. I built it, built it up, and we're still a small business, but I built it up to a level where I wanted it to be, and then I got stuck. And I said, I'm missing something in my business. But it took me a good many years to figure out what it was. Now, part of it was me, meaning I wasn't leading in the right way, and I wasn't empowering my team enough. The other part of it was that I am not a process guy. Now, I'm a financial process guy, but I'm not an operational process guy. And I really struggled there. And I couldn't get I couldn't get to the next step. So one of my employees, who was absolutely killer, worked with me for about 3 years. And then I said, you know what? What do you think about this model? He totally took out of my head and figured out how to process it out, and has in the last year transformed our business. So I officially made him a partner because I knew he had the skill set and he fit this scenario. But he was an internal employee of ours. So I'm not saying you go that route with an internal employee necessarily, but I'm saying an outsider who has other focuses distracting them, especially in her idea of being passive, and maybe floating you some money, maybe not, blah, blah, blah. Get out, run. That is not going to work. She's distracted. She's not going to really bring you value. She might give you some of her lower level people with some product that'll not be good. It will hurt you. I would say get out. Do independently. Dabble. Try some stuff. Maybe get some contractors to help you with some of the marketing until you get a good feel for it. And then look for another bigger outfit to help you. So that's kind of how I feel you should move forward. Next question is Nico Avilia. Nico says, should I incorporate my business mostly likely an LLC in Florida where I reside, or are there more benefits to incorporating in a state like Delaware? I have started a YouTube channel and I'm looking to monetize it in the future. I will be most likely starting an LLC for it. I have heard and read that incorporating in a state like Delaware has a lot of tax benefits. Also, my channel name is the Chitty Chef, but I'm looking to possibly do other sorts of videos in the future. Do you think it would be best to make a generic business name and then file a DBA under the Chitty Chef name? Thanks for the input. So I can only give you a little bit of input here, Nico. First off, Nico was going to be my third child's name if it was a boy, and it was a girl. But love the name. So the for this, there's one piece I could definitely tell you. So absolutely make some other name up, whatever it is, doesn't matter. Simple name as an LLC function, and then do a DBA for Chitty Chef, for sure. That makes sense. As far as where your benefits are tax-wise, this is out of scope again. I got to talk to Shirley here. She's giving me these tax questions. Again, we're not a CPA firm, so I'm going to have to say I don't have an answer for you for that. I mean, there are benefits of tax in Delaware. There are benefits of tax with if you're doing a tech company business, if you have some tech around the YouTube channel you're setting up, or some IP you might develop in there. But I don't know really what's the best move for you. So you're going to have to ask a tax specialist. Sorry about that. So next question is Garrett Moberly. Garrett Moberly. Sorry, I killed that one, Garrett. Garrett says, hey, Sean, what is the best way to manage my finances for my current side hustle that I'm trying to turn into a full-time job and pay taxes correctly? Business description, freelance graphic designer. So, Garrett, I'm assuming that you're asking, hey, how do I turn my side hustle into a business? And I mean, worrying about taxes doesn't matter. First of all, you got to make money to pay taxes. And even as a sole proprietor, without an LLC or without a business structure, you're going to pay taxes on your Social Security number based on the amount of income you bring in. So it doesn't really matter how you set that up. You can run it as a sole proprietor on your social. So I wouldn't worry too much about the tax structure. LLCs are really there for liability purposes. So if you're going to invest in the business, if you're going to do partnerships, if you're going to have potential employees on your within that year on your entity, then it might make sense to run an LLC construct or a sub S or whatever makes sense. But in the beginning, don't even worry about it. Just keep an accounting system, a QuickBooks or something of how much income you bring in, you get paid for, what are your expenses that are against that, and you can write off some of your ancillary expenses too, probably, to decrease your tax, like supplies, travel that you do to the places, all that stuff you can sort of offset against that and try to bring your taxable rate down. So then get an accountant who will file your taxes for you. So that's what I would do. Pretty simple. Throw a budget together, see where you land. And if you have profit, save 25% or 30% of that to pay taxes when Uncle Sam comes calling. All right? Next, Shane Noble. Shane says, have you heard of Profit First for contractors and your thoughts on that implementation into a business on the financial side of things with all the accounts and also with the multiple locations? It became so much work trying to move all the money around. What would be an easier way to simplify it? Business description. We are in the construction industry. We tried Profit First in our business and it started to work, but then it became a headache with all the accounts for each location. There were 5 accounts per location, and it was almost a full-time job to have someone move the money in and out of the accounts. Maybe just thoughts on it, and maybe simpler or something easier to be done. So, so I'm not sure what you're doing there, Shane, with moving money between accounts. Not sure why you have 5 different accounts on the construction side and why you don't have one account. I don't understand your setup, but I do know Profit First, and what's his name, Michael, who wrote Profit First, great author, great philosophy. I think his philosophy is really more about, the way I look at this, and I think it's good philosophy, but the way I look at this is it's more about a reserve, okay? And the way Michael wrote that book was he was saying people, us humans, this is how I interpreted this, okay? We are not structured to save. Not humans, Americans. We're not structured to save. So we see money in an account and we go, woohoo, I'm going to buy that car, or I'm going to spend on that marketing, even though I have no idea what the ROI is on that marketing. And I'm going to buy that tool set I really wanted because I think it's going to help that job over there, but it might not. And then I'm wasting money. So that's what we do. And so that's where his profit first mentality is. He says, look, shave the money off so that it's stowed away. You don't even think about it. And then at the end of the year, you're good to go. There's your profit. You can take it. So if you have a $500,000 business, $50K hidden away. So the way I look at that is it's kind of a reserve. I would say it's a reserve. So don't even worry about moving bank accounts around and all this stuff. Just siphon off some money and put it in one account. It's a reserve account. Every time a sale goes through, have it automatically, boom, deduct into that account, 10%. Boom. And then it's out of sight, out of mind, and you don't even know it. And then in October, you sit down and you look at your finances, you go, I got an extra $50,000 a year. Awesome. You go to your accountant and you go, how much am I going to pay in tax? Accountant says you owe 25 grand. And then you happily take that other 25 grand and put it in your pocket. Or go buy a car. A little more than that for a car. But you know what I'm saying. All right? I think that's what it is. So yes, I think it's applicable. I think it's really called a reserve. And here's one other financial metric to think about here, Shane. Always think about this. 3 months of cash. I always say to people, especially in your type of business, because you have deposits you have to put down on projects and things like that, make sure you have 3 months of operating cash. So if your average project is X, make sure you have 3 months of cash to cover the payroll, blah, 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 blah. So in case you have to put a deposit in or you have that money there. So that's one other way to look at it, and that's almost like profit. You're holding some of the profit. All right? Thanks. Next question. Darby Scott asks, is it okay for management to suggest privately to an employee that they should be cautious in their personal lifestyle because it is affecting others at work? I realize this is a legally touchy topic. I'm not even sure I've asked the question appropriately. We have an employee who lives a very open and free-spirited lifestyle, which is fine. Personal is personal, but is now affecting work and team members. The employee in question though fully vaccinated, enjoys frequent huge gatherings even while knowingly sick. She has had the flu twice in Q4 and COVID 5 times, oh my God, since the beginning of the pandemic. She then comes to work and spreads it, sometimes without symptoms. Is it a legal no-no to talk to her about being considerate with her personal lifestyle, since her continuously getting sick has now caused other team members to miss work due to catching things after spending the day with her? Ay. Darby, yeah, welcome to pandemic modern day problems here. But so yeah, this is something from Marsha O'Connor. I mean, I have no idea around the policy, the personal, the legality of this stuff. I shy away from personal stuff with employees. However, there's a big however here. There is a way that you can put together a productivity construct and say, look, we need everybody to do X. I can't have everybody out because they're sick. And you can kind of bring that up and like hint, hint, wink, wink. Like, if you're sick, stay out. And if you're not productive, I can't pay you for being out and not being productive over a certain amount of days that are in our policy. You get 6 sick days or whatever a year, and then after that, it's on your dime. That way you set the stage and you say, look, we can't affect our productivity in here. So if you're sick, stay the heck home. And if that person is sick 5 times with COVID, then they need to stay home, and they need to stay home 5 days, according to the CDC right now, when they're sick. And then, so that's 25 days. So for 19 of those days, they're not getting paid. I mean, that's how I would do it. If that would get the point across, I think. So that might be the way you have to do it. Otherwise, ask Marsha O'Connor. She's awesome at that stuff. But yeah, it's tough. And one other note, Darby, it's an interesting topic because we are a small company too, and I can tell you that I am involved as CEO in the personal lives of my employees, totally. But I'm not prying into their personal lives. I'm being involved in a lighthearted and fun way, and way that I can know who they are, so that I can make sure I align work aptitude and thought process for the organization just by understanding them. I'm not digging into real personal things, just sort of getting a feel for them, and I ask that a lot. I not a lot, but I figure out ways to like get into discussions with that. Although I don't pry. So it is helpful to understand what their tolerances are. So next question, Kristen Lander. At what point should someone consider changing an LLC to an S Corp? Oh my God. What? Shirley and Sean, we need an expert on here to talk about corporations and LLCs and S Corps. Every single question done is about this. Man, we need a session on this. So this seems to be, people worry too much about this. So my coaching business is an LLC right now, but I know I'm paying self-employment taxes because of that. Is there a threshold for when I should turn into an S Corp? For more detail, I'm a 50% shareholder in another S Corp, so I'm somewhat familiar with what I need to do to pay myself W-2 income. I'm just not sure at what point this should be considered on how to change the classification. Kristen, I said this earlier. I apologize for doing this to everybody on this live Zoom, whoever's still on, but go ask a CPA. Like, this is a very tax-heavy question. It's really related to taxes. That's it. That's all it is. So you could do whatever you want operationally with an S Corp or an LLC for the most part, okay? As one owner, it doesn't matter. It's all a tax question. So ask your CPA, when is the right tax time for me to do this? If you're thinking about, now this is where I can chime in. If you're thinking about partnerships, or if you're thinking about different classes of shares for people, or if you're thinking about profit interests, okay, which is a way to vest somebody with hurdles. Like, for example, let's say you had the business for 3 years. You want to bring a partner in, and you think your business is worth 500 grand. And you say, I'll bring you in, but you get profits over everything over 500 grand. You're setting up two classes of shares with that in your company. One is you, who's all the value, and the second is the person who is coming up above 500,000 in value at maybe a 50% ownership, or whatever you do. In that case, you can't be an S Corp. S Corp does not allow for different classes of shares in an organization. LLCs allow for that because they're LLC partnerships. So you got to think about those things if you're considering that down the road. But if you're going to own the business outright, all it is a tax question. So go to your CPA. All right? Thanks. Next question. Dina Buktovich. Dina says, how do I start wholesaling wedding dresses to bridal shops? Business description. I'm a wedding dress designer and have some interest from bridal shops about carrying my dresses in their stores. What do I need to know about beginning to wholesale, as I have never done it before? What sort of contracts do I need to have in place? What needs to be included in the contract? What questions do I need to ask the bridal stores? Thank you. Dina, awesome questions. Love it. So congratulations on that you're a wedding dress designer. I think that's really, really fascinating. So love it. Well, lo and behold, I'm not sure if they're still a member, but there is I believe so. There is a member who runs a bridal shop with accelerators. I spoke to her on one of my town halls. God, I forget her name right now, but she runs a great bridal store. First of all, you should call her and ask her specifically what she does to bring in designers and dresses. I'm sure she'll give you exactly what you need. So she'll know much better than me because I'm not super familiar with that space. However, you do want to have certain contracts in place. You probably want to have some contracts that sort of say they can't copy your designs, they can't resell without your knowledge, they can't, take your liking and advertise it unless you say okay. Like there's probably some legal stuff in there because it is your own proprietary stuff. I mean, you have created these from nothing. It is your creation. It's almost like where our whole economy is going. Not to get off on a major tangent here, but I think our whole economy is going towards that, where the power of creation, like you do there with dresses, is going to be in our hands and is actually going to be in this little thing. Even more, this phone, with things like NFT, non-fungible tokens, and crypto-based stuff, and a lot of decentralization of those things that is going to allow creators to have more power to set up IP and put stuff on the blockchain that legitimizes their claim to their IP. So again, I'm tangenting here a little, but that is what you should think about, is protecting that design construct you do. And then the questions to ask the bridal stores are probably ask the one in our group what they look for. But they're going to ask you things like, what's your price point? And obviously they need a margin, so you have to have you have to be reasonable what you sell it at because they have to mark that up and still be able to sell it. And typically on the retail side, they want to go up 100% in markup. So typically, so they can get about a 50% margin. It varies by industry. Could be more in the dress industry, especially wedding dresses. I'm not sure. But so those are some things to think about. Is this the last question? Oh, we're making some headway. Dina, that was a great one. Love it. Good luck. So next question is Grant Elliott. How do I determine what amount of pay would be best for a new trainer for my online coaching business? I own an online back rehab coaching business. I am hiring some online trainers to help me grow the business. My company will obtain the clients and do all the admin work, and the trainers will train clients. How do I determine the best rate of pay for them? So I love that about back rehab. Huge need in our society. Is that chiropractic or is that something else that you're doing there? I was just curious, but that's great. How would be the best pay? So I think you want to see what the market is. You want to see what the market bears out, and ask around and say, what do typically trainers in this space make for as a 1099 or even as a W-2 if they're working full time for you. But like, what typically are the ranges? Maybe get a payroll company or some group to give you some sort of standard ranges. Find out what those are, and then look at your margin construct. So look at your revenue you're charging, look at how that works, and make sure you have enough room to make the profit you need to pay for yourself, the operating expenses, and have extra capital to grow. So, as an example, if you're charging a client $100 an hour for online back rehab or more, I don't know, then maybe they're getting $40 an hour, and that's 60 or 60% margin is your delta. And then 20 or 30 of that goes to your operations, and then another 30 goes to your profit and growth capital. That might be the answer, but I would need to know the whole financial construct of your business model to see what makes sense and see if you're charging enough, frankly, to have enough room to bring on these trainers, because they're probably a decently paid lot to give that kind of support to people. So that's the best I can give you with the information provided. So hopefully that's a little helpful. And I think that is all I have today on the questions. Let's see. Yep, that's it. So we are wrapping up. And as always, pleasure to be here. Happy to be part of this group. And I guess I'll see everybody soon on the next Town Hall Live, some point next month. And good luck, everybody. Have a good week.